You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to the Options Insider's ongoing coverage of the 2024 Options Industry Conference, live from sunny. I can confirm it is sunny. I did get a chance to leave the actual studio today for a few minutes and go outside, so that was nice. I can confirm it is sunny Asheville, North Carolina. We love OIC. It gives us a chance to, of course, get a lot of great panel content for you folks who can't make it down to the show every year. You can check it out on your own schedule, but of course, it also gives us a chance to catch up with a wide variety of people from throughout the world of options. And next up, believe it or not, is a newcomer. Never been on the network before. He is Steve Quirk, now the Chief Brokerage Officer over there at Robinhood. Steve, welcome to the Options Insider Radio Network.
Thank you. I'm thrilled to be here for my first time.
Yeah, it's hard to believe you've been in the space for a while, but we never, for some reason, never happened until. And that's the magic of OIC, Steve. It all happens.
It is the magic. I love it.
Isn't that the slogan? It all happens in Asheville, or something like that. Yeah. But maybe we made it up. We're making magic here.
What stays in Asheville?
Yes, exactly. What happens in Asheville stays in Asheville. Well, Steve, like I said, you've been around the space for a while, but this is your first go around the sun with us here. So let's start there. Give our listeners a bit of an overview of your background in the world of options and what it is you do day to day over there at Robinhood.
Sure. So I arrived at Robinhood sort of full circle from starting at what I'll call the back of the stack in terms of options. And what I mean by that is in the 80s, I was on a trading floor, trading options and interacting with the other side of retail brokerage firms' option trades, and worked my way to the front with a small startup called Thinkorswim, which was eventually acquired by...
I'm not familiar with it. What is that firm? Tell us about it.
Thinkorswim. That's Tom Sosnoff and a whole collection of people that are, well, many of them are here at this conference today, and you've been speaking with some of them. And we were acquired multiple times, all the way up to Schwab, and eventually left Schwab and went to Robinhood. Always been in the retail brokerage space, and had an emphasis on options. So I've been trading options, since the 80s, and continue to trade options and have seen the explosive growth, been part of educating people, been part of building technologies, introducing products for people, and, been involved in all the routing and all the other aspects, basically the whole ecosystem.
We're glad to get you on the network. Robinhood obviously puts up a lot of options volume, so it's good to get you talking to our listeners out here. Speaking of our listeners, before we came down, Steve, we polled our audience. We said, OIC, we get to talk to a lot of people. What are the hot button issues? What is top of mind for you? What should we talk about this year? And they overwhelmingly came back to us with two things. You can probably guess what we are, but we've been playing a fun game this week. Go ahead. What do you think are the two issues that are most pressing, most top of mind for our audience?
Short-dated options.
Yep, bingo. That's the number one, yes.
Possibly PDT.
No, actually, for this one, maybe for you guys, it might not be as big of a deal because you already kind of offer this, but it's the 24-hour debate that's been going on right now, kind of NYSE kicking it off again, putting out a poll, SEC debating it. So our audience also wants to talk about it there as well. We'll get into it, Steve and I, 'cause this is the first time you and I have really had a chance to chat, at least officially here on the network. Let's start. The zero-day contracts, they're popular, do a lot of volume, also controversial. Yeah. Even with our option-savvy audience, whenever we poll them, usually they're somewhere split down the middle on whether they love them, they're the best things in sliced bread, or they're going to destroy the world as we know it. It seems like there's no middle ground for these products out there. And even at a show like this, we do get to some diversity of opinion. So I'm curious for you, where do you stand on the whole 0-day debate? Are you yay? Are you nay? What do you think?
I actually stand on the side of basically I stand with customers who get to decide what they want to do. And one of the things I made this point on a panel this morning that I think is sort of missed in this discussion is the duration of a trade, whether it's an option, an equity, a crypto, a fixed income, ETF, whatever it is, it's shortened across the board. This behavior is not because somebody introduced an instrument. This behavior is because that's what this is a mechanism for customers to have more precision in what they do. And the analogy I like to use is if I told you, you're sitting with Apple and you know exactly what day earnings are, and you've held Apple and you have 30% gains and you want to protect yourself, why do I need to protect myself for 30 days? It'd be like saying, I know there's a storm coming, I can buy 1-day insurance on a home. Well, let me buy it for a month or a year. Why would I do that? Like it's just giving you the ability to be more precise with your investments. And by the way, that's in terms of capitalizing, on a move that I'm an opportunity to get into a stock or protecting myself or whatever you want to do. So I think what's lost in the conversation is number one, it's just a change in the behavior of customers. They could always trade an option in a single day. When options were 30 days, you can trade it the last day. So it's the introduction of the product, which I think is just filling a need for customers. And so I'm of the camp that people should be able to invest the way that they want to. And it's interesting because having been in firms where customers skewed to the older side, the average age is probably 55 at Schwab. Much larger accounts. The average age at Robinhood is in the low 30s. Half of them are first-time brokerage clients. But they want to be able to invest in the same manner that the people who are older and wealthier do. And so I don't think it's our place to tell them, provided they're doing it suitably, that they can't.
Speaking of that use case for the customers, obviously you're putting up a lot of 0-day flow over there, or I'm sorry, short-term. I've been corrected many times this week. Short-term options. The exchanges go crazy when I say 0-day. I think that cat's out of the bag already, but I'll indulge them just for this short duration flow that you're seeing. What are some of the use cases? Is it almost entirely speculative? Are people coming in and hedging on, let's say, a Fed day or an earnings day? What are some of the interesting use cases you're seeing for the short-dated stuff?
It's funny because we get a lot of inquiries from the media about, how people are using them. And, they said, well, we know everybody is losing money there because 80% of options expire worthless. And I said, you're assuming that they're buying them. If they're selling them, 80% expiring worthless is a very good thing, right? And 80% expiring worthless is a little disingenuous because they're out of the money, obviously, right? So I just think that we see the whole gamut of uses. People are speculating, people are hedging, people are generating income, people who are just going for short-term gain. It's across the whole board, and that's kind of what you have to look at the customers in their totality. And what I mean by that is, let's take a prototypical customer who's got a portfolio, and, they might want to generate a little additional income, or they might want to take, 10% of their portfolio and say, I see an opportunity here with an NVIDIA earnings play. I'm going to try and capitalize it. If it's successful, great. If it's not, okay. I think one of the interesting aspects, and I had this debate back and forth with a Wall Street Journal reporter. We were doing a story on this, and she's like, the start of her story was, I'm going to find out about the riskiest trade on Wall Street. And I said, okay, why is it the riskiest trade? Well, it's so short in duration that it's the riskiest trade. And I said, all right, let's just break this down. If I bought an option for 6 months, Is it a risky trade? No, it's not. Okay. If I bought it for a month, is it a risky trade? No. A week? Not really. But a day is. So like, where is that line? Tell me where that line is. Because I don't really, and who draws that line? Like what, like who decides that, the duration of your investment should be longer and then you're a safer person? I wouldn't feel very comfortable sitting in a stock for 30 years if I wasn't monitoring it.
Before we get off the 0 day, the other hot area that everyone's asking us about in the audience and people are talking about down here is, of course, expanding it. And so they want their Apples, they want their Nvidias, they want their Teslas, all that fun. We're hearing a lot of interesting back and forth about what is gumming up the works and whether or not we're even going to see that anytime soon. I'm curious, from what you're hearing behind the scenes, what is the number one sticking point that you're hearing? And also, do you think we'll see these things anytime, maybe even this year?
The debate back and forth is when you introduce them on individual equities, you're actually introducing some risk to the brokerage firms. And I'm sure you've heard this from others. Excuse me, I got a cough. And that risk is borne by the broker. So if these were cash settled, we wouldn't have that concern. But when you have an expiration every day on a physically settled, that means, expirations are very busy days and it requires a lot of close monitoring by brokerage firms, especially if we're doing a lot of them. So that's really the pushback from the brokerage community.
I've heard people talk about launching a cash-settled version of equity options to kind of make an end run around all this. Would you be in favor? Is that your preferred choice, or is it maybe getting rid of contra exercise? Which way would you like to see it go?
I've pushed for that, cash-settled. I've pushed for cash-settled.
Really? Interesting.
There's some work to be done by exchanges and the OCC in order to get that. It would eliminate a lot of risk in the system for market participants. So we've had to educate other market participants. Of course, market makers are big proponents of these. They love them. Exchanges love them. They're great. But, we just make the point that, listen, we're going to put our hands up and say, these are not great for us until we get some kind of way to ensure that we're not going to bear the brunt of the risk.
Interesting. So you'd be okay launching a whole new class of options before we get to 0 day. You're not concerned about confusion or anything like that with the clients?
There's confusion. There already is. Like, you already have to deal with some confusion because there's so many expirations now. But I think that's, brokerage firms in general are pretty good at trying to navigate that and make it more presentable so people can understand what they're trading.
The other hot issue with our audience is something you folks have actually been doing for a little bit now, at least an approximation of it, which is, of course, the whole 24-hour debate. Yep. NYSE kicking it off again recently. In fact, it's funny, I stopped talking about this years ago on our circles here at OIC and on the network because it seemed like there was no interest in after-hours options trading. There was no momentum in it. It wasn't going to change. It was a dead topic. Why keep beating that dead horse? And all of a sudden, everything old is new again and sexy again. And so NYSE kicking it off on the stock side. We actually polled our audience, and they're a pretty options and trading savvy bunch. You think they'd say they want it all the time, 24/7. They actually said almost 70%, 69.9% said no. They like a little bit of a hiatus in their day, which was kind of interesting to me. But it's interesting. You folks have been offering an approximation of that. And let our listeners know who maybe don't know, what can they trade 24 hours right now in Robinhood?
Yeah. So right now you can trade 922 stocks.
Really, that many? Okay.
Yeah, it's 85% of all the volume, that happens in all the names that drive all the volume in a day. You can trade those around the clock, 24/5. Yeah, it's an ATS that we partner with, and so it's not matching. There are liquidity providers in there, the same way there are liquidity providers in the day, and we see periods where we get a lot of traction. Like there are examples like Supermicro, has a move 20% overnight, or there's an analyst, J.P. Morgan analyst, that did a downgrade of Tesla on a Sunday. We're the only game in town. NVIDIA during their earnings. I mean, crazy volume because it moved like crazy. Supermicro had a massive move overnight, 20% move. in the evening hours. So we see real big spouts of volume. It's caught the attention of the exchanges. When we were first doing this, I went to the exchanges first, and said, hey, this would be great if you guys would do it, but they're like everybody else. They are resource constrained, and they said we want to see the volume first. Well, hard to get the volume without an exchange, so we found a liquidity partner that could help us do it. But now we have all their attention. I mean, the fact that New York Stock Exchange, by the way, a survey. Really? That's how you're going to figure it out? Why don't you just look at the volume?
Yeah, it was an interesting choice out there. But you guys have, like I said, been a little bit ahead of this game already, so you must kind of find this a little bit amusing now to see everyone else kind of debating this and how contentious it is. If it does spill over into options at some point, which obviously if they're going to adjust the underlying, it obviously has to, what format do you think makes the most sense? Is it just 24/5, go at it, everything trades around the clock like your stocks do? Or is it more maybe, I've heard people talk about a limited pilot and the top 10 or 20 names, or maybe limited to certain times of the year, during or outside of earnings season? I've heard all these different proposals. Well, what makes the most sense for you if they're going to extend options trading in some capacity?
Well, first of all, I think it's going to have to happen on an exchange in order for because every option execution happens on an exchange. So, but the exchanges, I think, have an interest, and they've noticed what the volume looks like from an equity standpoint. I would imagine that it would roll out in a small number of symbols. By the way, when we first rolled out the 24/5 trading, that's the way we did it as well. Small number of symbols that are very liquid and heavily traded, and then expanded it as the audience grew. It's one of those areas like, look, we're part of a competitive set of brokers. So, when we can find ways to differentiate ourselves, we do. But this is one of the areas where you want to put out something differentiating, and then you want everybody to copy you so that you get a more fulsome market. So my interpretation of what would happen would be a small set of symbols we would start with. And by the way, this is already being done in ES options. Like, they trade overnight. And I don't know what the numbers are, but in my previous role, I think retail was doing 25% of the volume overnight. So
what do you say for, let's say, the hardcores out there who appreciates, let's say, the opening and closing bell and the break, the respite that it gives them? Is that just an antiquated concept? Is that going the way of the dodo?
I was quoted in, where was I quoted? I was quoted somewhere because I made a snide comment about our customers don't really enjoy the notion that an old man has to ring a bell 2 times a day in order for themselves to have to get the green light to trade.
It is interesting. We do a crypto derivatives program as well, and seeing that audience, many of them are crypto native, coming to the world of options for the first time. And to them, it's like, well, what do you mean this closes? It's anathema to them to even think of it that way. And so it's a very different audience, very different use case.
Well, I'd take it one step further. So I said, the customer at Robinhood is early 30s. Half of them are new to brokerage. They're used to an e-commerce model that's open around the clock. That'd be like saying Amazon closed. They're like, I don't even get it. Why would it close? Well, because, people have to be there. What do you mean? We just went through COVID. I didn't see one person on a trading floor. Why does there have to be people on a trading floor? There doesn't. And by the way, they trade around the clock anyway. All these market makers trade around the clock. A lot of the exchanges trade around the clock. It's doable. They just want to. The analogy I use, because my board, when we first were coming up with the idea of doing this, our board kind of pushed back a little bit and said, "Hey, listen, if this was something that was going to be viable, the exchanges would be doing it." And I said, "No, you're thinking about it the wrong way. The exchanges are restaurants. We're mass transit. If mass transit ran all night, that restaurant's going to be open all night. The only reason that they close is because mass transit closes, right? And so, if you continue, and by the way, the fixed costs are there, the variable costs are light. So the idea that you can continue to run that thing around the clock, it's good for everybody, including customers, because, in most brokerage firms, I think 70% of the research, education, and decision making around what they're going to invest in, particularly if they're not people who do it very often, doesn't happen during the waking hours. They come home from work and digest news and do some education and figure out what they want to invest in. And the idea that they have to wait till the next morning is kind of something that's foreign to them.
For a lot, they have day jobs too. They can't put orders in during the day. So there is a certain resonance, I guess, to a certain amount of the audience definitely out there. You're talking about all the volume that's going up in the after hours. The volume in general has been a big trend, obviously at this conference, but also just post-pandemic. It's been like a hockey stick pretty much, just a crazy growth out there. We see it anecdotally in the people who are discovering options for the first time and coming to a network like ours to listen and talk about options and talk about things like options education and stuff. So it's been fascinating for us to watch this anecdotally. And early on, like a lot of people in the business, I was skeptical. I was like, okay, everyone's at home. This is an aberration. This will go away once everyone goes back to, normal living. And then sure enough, I was proven demonstrably, I was happy to be proven wrong, but I was proven demonstrably wrong. So I haven't faded this volume rally at all since. We've been looking at the numbers and discussing whether they can maintain month after month, year after year. The answer has been a resounding yes. Kind of the first hiccup came a month ago in March when we saw about roughly a 10% decrease in overall volume year over year. Obviously, March of 2023, a bit of an outlier because of all the contagion madness going on then, but still a bit of a downturn. I've actually been in this room for the last couple of days, so I haven't looked at, people have just told me the new OCC numbers are in now as we're recording this on May 1st, and April was a bit of a banger. So maybe that's starting to go away. But I'm curious for you, people, once they saw that down number, they were running around like chickens with their head cut off. There you go. The gravy train is over. The growth rate is over. You obviously put up a lot of flow over there at Robinhood. What are you seeing from a volume growth perspective? And your thoughts on, is that just the pause? Are we plateauing? Are we trending down? Or is it just kind of the beginning of the next leg up?
I actually think, if you look at the difference, and I'm sure you have discussed it here, if you look at the difference between the growth rates on, other asset classes, obviously options have been far outpacing, equities. Obviously, crypto's kind of episodic, so I don't know if you really can do that. But I don't know that the growth rate will continue at its current pace, but I also don't see a big turnaround happening because I think once people get comfortable trading options and they do it and they find a method that works for them, it's something that's a lot stickier than we see with some other asset classes because they just find ways to generate income or protect themselves on a portfolio, and once the model's in place, they tend to repeat it.
We're having a lot of fun here, Steve. I do have to give you a hard time about one thing. Yeah. You made a comment down at, I think it was FIA last month now, on the panel. You were talking about options education, and they asked you about the education at Robinhood, and you said, we don't really do a long-form education anymore. Our audience lives on TikTok, so we do kind of TikTok snippets. And that kind of caught my attention. I was like, well, that's a good way to engage people, obviously, and kind of bring them in, but hopefully there's more going on than just tell me I'm wrong, Steve. Tell me there's more going on there. Okay.
No, there is. There is. It's a lot of the education's in the pathway. That's where people want it. Like they don't want to leave and go to we have separate learning. We have a learning center where they can go and learn long form. Not everybody learns the same way. I'm sure you know this better than anybody. So you just got to deliver it in the manner that they're comfortable. On demand, they can pick it up anytime they want. We give them both forms.
I wouldn't know anything about on-demand options content. That's not my thing at all.
So I think delivering it in any manner that they're looking for is what what we strive to do. And you're always going to update it because things change so frequently in the option space.
So just to clarify then, you do have options educators on staff.
We do.
There is education going on beyond the TikTok.
There is.
15-second. Okay. I know a lot of our audience.
And by the way, a lot of that is customers teaching each other, which is very powerful, because then it's one thing to come up with a trade idea on your own through education or any of the content that's available, but there's a lot of times when people want validation. They want to bounce it off people that are like-minded, and that there's a lot of avenues to do that today.
Well, Steve, I appreciate you taking some time out of your conference here to join us for the first time. That's crazy. That's never happened before now here. Before we go, we like to leave our audience wanting a little bit more. So give them a hint, give them a tease. What can they look forward to coming down the pike from you and the options team over there at Robinhood?
I would say, don't hold your breath on the idea that maybe this is the next instrument that could be trading around the clock. I don't think it's anything. It's not something that's happening anytime soon, but it's definitely on our mind.
And that will please a lot of our audience, maybe terrify some others, but it'll certainly be interesting. Like I said, Steve, I thank you for joining us, and we'll look forward to seeing how all this and how maybe next time we chat, we'll be full 24/7 or 24/5 at least.
We'll be doing our chat at 3 a.m.
Yeah, I'm a bit of a night owl, so I could probably make that happen. But we'll look forward to seeing how all this unfolds in the marketplace in the coming months.
Thank you.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.